One often overlooked area of taxes could be costing you hundreds of thousands of dollars of tax money. I am Jessica Weaver, founder of the Wealth Boutique, and this is our 4-part series of lazy money. We've covered things like cash, old retirement accounts, even your lazy estate, and this week is about taxes. Let me guess, usually you go to your accountant maybe once or twice a year. They go through your taxes, you get a refund, so you feel like you're doing pretty good with taxes. Woo, I'm getting money back. I must be being tax efficient. But rarely are we looking at taxes in regards to your investment accounts. So many times it's your income, 1099s, your W-2s. Can we itemize deductions, use a standard deduction, and you are missing out on an area of your investments where you could be saving so much money. What am I talking about? Well, outside of your cash flow with taxes and your accountant, they're looking at how to save you on taxes today. Our job as wealth advisors is to look at how can we strategize with the tax code, be more intentional so that we can save you on taxes throughout your entire life. I specialize especially in retirement for people. Now, I'll give you an idea. I've been with an accountant for many years, and I kept bringing him up tax strategies that I saw like this on TikTok or on Instagram or an article I read. And he would talk right over my head on how they didn't apply to me. Finally, after talking about this concern with my fellow financial advisors, I was introduced to an accountant who works with advisors like me. And all of these strategies that I was bringing up to my old accountant, he's like, no, we can do that. This is how we can execute them. And it was about $50,000 of tax savings. I had $50,000 of tax savings that we found in one session. And I've noticed the work that we do at the Wealth Boutique, it's more than $50,000 that we find. We have found $500,000, $1 million, $1 million plus dollars of tax savings. So I'm going to break this down into two areas. One area is for retirement accounts. One of the most overlooked, underutilized strategy is moving pre-tax money in 401ks, IRAs, 403bs into post-tax, tax-free Roth IRA buckets. Why do we do this? Well, for a few reasons. One, taxes are really low right now, really low. They're going to get more expensive because we just have too much debt as a country. But also in retirement, you have 3 tax brackets to be aware of. Your income tax bracket. Your Medicare premiums are based on your income. That's another tax bracket. And then your Social Security gets taxed based on your income. So when you think you aren't going to pay more in taxes in retirement, we hear this myth a lot. That's not the reality in today's world. And so doing it now, biting the bullet, converting to a Roth to save you on Medicare premiums, to save your Social Security from being taxed, and to have tax-free income in retirement, it's huge. Another reason we do that is because when you inherit an IRA, even if it's from your spouse, there's a widow tax. You will pay, on average, 30 to 40% more tax money on that. Why? Well, when you think about your tax brackets, you have married filing jointly tax brackets, which are much more friendly when you're earning more money, versus a single filer, where you get skyrocketed into a higher tax bracket much quicker. You inherit this IRA from your spouse, you still have to take money out at required minimum distribution age, at age 73 to 75, depending on the year you're born. You're forced to take money out. Then when I pass away, my children inherit the IRA. They have 10 years to take the money out. So they're going to pay another 30 to 40% in taxes. So from generation to generation, you can see where a third of that money is stripped away with taxes. But ladies, if it's in a Roth IRA, that money comes tax-free to my spouse, tax-free to my children. And if you DM me right now, you can get a total tax bill and see how this one strategy can save you thousands. We've seen hundreds of thousands. We've seen millions of dollars in tax savings. All right, so that's retirement accounts. How about non-retirement money? Maybe you have an investment account, a stock portfolio. Have you ever heard of tax loss harvesting? Well, this is a practice of selling a security at a loss to offset future gains of the portfolio. A lot of advisors do this at the end of the year. They might do it once or twice a year. We do it daily. We do it daily. Why do we do it daily? Because On average, it saves you 1.65% of the portfolio value each year, and it's only getting stronger. We've seen that number rise forward too. So I'm going to give you an example of a case that we are working on. This is a couple. They are in their 60s. They have $500,000 in a 401k. They have $500,000 in an investment account. By converting the 401k into a Roth IRA, it's going to save them about $391,000 of taxes. $391,000. Would you rather have that money or the IRS? Or would you rather have your heirs have $391,000 or less? Now, by adding these tax strategies to their non-retirement accounts, they're going to save on average of about $276,000 over a 30-year period of it. So we just found them over $500,000 of tax savings from these two exercises. If you're curious about this, reach out to us at the Wealth Boutique, because we do these cases all day long. This is our sweet spot. This is exactly who we like to work with, who we specialize at working with. And we really are here because we want you enjoying that money. That's $500,000. How many trips can you go on with your family for $500,000? We just got off of a review meeting with one of our clients. He goes, I'm giving back to charity more than ever before. Our church has renovations. I was able to be part of a $4 million pledge. He's not pledging $4 million, but collectively $4 million. And he was able to be a part of that huge movement in his community. So even if it's not trips, it could be giving back. What would you do with an extra $500,000? It begs a question. And it goes back to last week's Lazy Money on the lazy estate. So if any of this is piquing your mind, reach out to us at thewealthboutique.com and we will get you set up with one of our incredible female advisors. I will see you next week as we wrap up our 5-part series on lazy money. This gives you a taste on how we can be much more tax efficient, not just with our income, but with our portfolios. I'll see you next week for another part of Lazy Money. I'm Jessica Weaver.